just sitting at home watching. I
performer in the S&P 500. Strong results for the year, 7% increase in revenues. Macau definitely came back, 25% year-over-year rise in the segment there in terms of earnings. China revenue, 4% rise. Digital revenue grew 15%. They said BetMGM is going to be profitable in 2025. And some commentary on the general business here that we can share with you from the CEO. We're encouraged by the strong demand we are seeing in the business so far in 2025, which positions us well for continued growth. In fact, December was our highest convention booking month on record. And in January, we saw revenue growth in our Las Vegas Strip resorts and regional operations, as well as strong future bookings. So that bullishness helping propel MGM to the top of the market.
Yeah. Did want to mention Deere. We didn't really hit that. It's down about 5% on results. This has been one of those, oh, no. Oh, yeah, it is down, I think, about 5%. I thought it was the MGM quote right there. Where essentially last quarter there was a lot of talk of this is the trough. We're going to actually see demand pick up. The guidance was a little soft for the full year on those results. But at the same time, it's been a very strong stock. It's as expensive as it's ever been, basically, on forward PE, and as great a premium to Caterpillar on a PE basis as it's ever been. So you've had this sort of favorite status. People do love it. It's a great high-quality company. There's an AI component to it. It is a little bit more of a high-tech story. But it seems like it just sort of strayed a little bit to the bullish expensive side, going into, again, a number where it's a little bit of a noise factor in there in terms of what demand's going to look like here. I guess the farm economy, some questions about exactly how aggressive farm income is going to be, given a lot of the movements in spending around the world.
I mean, they're definitely more indexed to ag than Caterpillar versus construction. Right. There's also been a lot of history reminders about how the farm economy was supported in the last trade war by some of the proceeds from those tariffs. In fact, a lot of them went back into making sure farmers were protected from an income standpoint.
No, there's no doubt. I don't think anyone's too concerned about wholesale reductions there, but nonetheless, it looks like Deere, one of the favorites in industrials, is backing off just a little bit.
I mean, I've been watching energy, too. The sector is underperforming today, down 0.7%. But just with all the talk going on about Russia, Ukraine, the phone call between Putin and Trump yesterday, Peter Bukvar this morning in his note asking some key questions about if the war were to end, what would that look like for gas imports to Europe, for business between Europe and Russia? I mean, all of this is very unclear, but we forget it had a huge economic impact and an impact on the energy market. There's also increasing talk of a war heating up again in Gaza. President Trump offered an ultimatum to Hamas to release the hostages on Saturday, said, or else there would be hell to pay. We don't know what that looks like, but we do know that Israel is prepared to go back in there. Again, we watch oil and energy. It's not higher.
No, in fact, WTI, this is a new low for the year so far. We should also mention, we have been keeping track of some of these corporate layoffs. EL laying off 7%, Kohl's laying off 10% of corporate, and then yesterday Chevron up to 20% by 2026. These are all efficiency pushes, but it is an interesting timing given that we're also looking at the prospect of government layoffs.
Yeah, trims all over the place.
I mean, it hasn't showed up in the jobless claims number, I'll tell you that. We got jobless claims today. Again, another pretty benign number. In fact, the weekly number of Americans filing for jobless claims fell by 7,000 to 213,000 last week. So efficiency cuts, not mass layoffs, I think is the way correctly to frame it.
The Journal's framing today, though, is for those who either take the government buyout or who do get laid off, what kind of job market are they entering, given that the hiring rate is close to recession lows at the moment, just above 3%.
Yeah, you've actually seen the soft spots within the job numbers in things like personal and business services. In other words, white collar, along with, we talked about construction, software engineers, openings have plummeted. Everyone's looking to do it with AI. So yeah, I think it's spotty, although you're right, Sarah. I mean, right now you're starting from a position of relatively firm conditions, and the burden of proof is on those who say it's going to get worse a lot faster from here.
Your MGM news, definitely all the casinos are moving. RCL's moving on this dividend hike. And then interesting week it's been for at least the beer industry. Molson Coors, one of the big league gainers today. We saw the Heineken numbers earlier in the week, surprisingly good.
Coors brand volume was down 3% in the quarter, which actually they did say, according to the CEO on the call, was an improvement throughout the third quarter. More pronounced value-seeking behavior during the summer is how the CEO phrased it, but I think it's no secret that the alcohol business is under pressure right now, and beer in particular was already weak going into this, and now with this new trend of people drinking less alcohol, whether it's tied to GLP-1s or more health-conscious consumers or more studies showing that alcohol could lead to diseases. The Surgeon General before, the parting Surgeon General from the Biden administration who wanted to label alcohol as a cause for cancer, all of that's in the mix. Also, we are waiting RFK Jr.'s confirmation vote this morning, could come as soon as this morning, where he would be confirmed. He passed that key, out of committee vote to become the Secretary of Health and Human Services with jurisdiction over the FDA.
You do wonder if it's a maybe sell the rumor, buy the news kind of thing on all of that, right? In other words, how much worse is it going to get, especially when we're looking globally? We'll see. I mean, if it really seems like it's more to come.
Packaged food also has been under pressure on the RFK stuff, on earnings. I mean, it's been kind of a mixed quarter, but Nestle, one of the biggest out today. Organic sales growth was 2.2%, which was actually a little bit better than expected, but is a pretty steep slowdown from what we have seen from recent years. Last year, we were in the 7% on organic revenue growth. So the stock, I think, is reacting to better than expected news, but again, and the comments on North America, weak. Our growth was disappointing. The consumer demand was weak, particularly at the lower end of the income spectrum. We lost share in frozen food. We were held back as well in coffee creamers by capacity constraints for most of the year. It's the food grocery business. It's tough out there. Price conscious consumers are changing their behavior.
Yeah, we talked about Kraft yesterday. Unilever's down 6%.
Kraft got a downgrade today,
double downgrade,
and it's actually following, to the downside.
Meanwhile, another big mover is Robinhood, adding to the strong start to the year, up around 70% in 2025. And joining us first on CNBC is CEO Vlad Tenev with Kate Rooney. Hey, Kate.
Hey, Carl. Good morning. Vlad, it's great to see you. Thanks for being here in person.
Thanks for having me.
So big quarter for you guys. Stock is up double digits overnight. Crypto was the big driver, ton of trading activity. And you think about Q4, that was really the post-election rally that you saw. What kind of momentum are you seeing in this quarter into 2025? And what signals are you seeing that can potentially continue?
Yeah, Q1 has been strong so far. We've seen the momentum continue. And crypto's been a big story. Obviously, it's done well since the election, and our crypto revenues were up 700% year over year. Crypto volumes up over 400%. But it was also a balanced quarter. I think one of the main advantages of Robinhood as a platform for our crypto traders is you can also trade options and equities and futures alongside earning a high yield on your cash. And so there's just many reasons why you would move your assets into Robinhood. And that drove net deposits to over $50 billion for the year, which was up a very large amount over the previous year. So crypto, I think, gets the headline, but it was just a diversified quarter with, now we have nine business lines generating over $100 million in annual revenue.
How much of an overlap is there between that customer who's trading crypto and trading options and equities and everything you talked about?
We tend to see that for our active traders, they actually tend to be the ones that adopt all of our products. They're adopting retirement more quickly. They tend to adopt crypto and trade crypto. They go between assets. So they've been adopting futures, which is a new business that we have. And then Robinhood Legend. Robinhood Legend was a little bit of a dark horse in this earnings call, but we announced that that's already a $50 million business after just 2 months of being live. So that's been growing incredibly quickly.
And that's for professional traders, that Legend, just to be clear.
That's our desktop platform for active traders.
You also talked about some other asset classes, sports gambling or sports contracts, it seems like is a big opportunity. What went down with the Super Bowl contracts? You guys launched that, and then the CTFC intervened. With that backdrop, do you feel confident that you can actually get into this sports contract arena? Yeah,
I mean, let me just say that prediction markets are the future. I think they're the future, not just for traders, but also for news and information. So I've been a big believer in the power of prediction markets for a long time. And I think there's a ton of value, both for trading and also as a source of information. So we're gonna be going big, and we're gonna be a leader there. We were disappointed in the CFTC's sort of like way of handling that. I think you know, the fact that it was okay for others to offer this product, but you know, for Robinhood it was not. I think was not ideal. But we're going to continue to push for clarity here. You know, we recognize there's not a lot of clarity because it's a new innovative asset class, but I think we're going to push for that, and we're going to get that. And Robinhood will be a leader in offering these new innovative products to consumers.
Have you thought at all about a potential reputational risk? You know, there was a time a few years ago, you guys were fighting this perception that Robinhood was gamifying stock markets. You guys have come so far from GameStop, and now have retirement accounts, are going after this more sophisticated trader. Do you worry about getting into sports gambling and what that might mean for some, you know, in terms of the perception of Robinhood? Yeah,
I mean, I think that these prediction markets are qualitatively different than sports gambling for a couple of reasons. One is these are CFTC, federally regulated event contracts. And what that means is instead of, you know, betting against the house or setting a line, this is an exchange, a designated contract market where buyers and sellers are meeting. So you're not, you know, setting a line. So I think it's very different. I also think that, you know, if you think about the news, right? I like to think about prediction markets as the next generation of the news. And we know the news is economically valuable. You know, people pay for getting the newspaper. They pay indirectly for, you know, shows like this through advertising. And so if you get the news before it happens, that should be even more economically valuable. So I think a lot of people, it's easy to just kind of lump it in with gambling, but this is a liquid market that gives people information in real time. I think there's a ton of economic value in that. What about private markets? You wrote this op-ed in the Washington Post. It was fascinating. You talked about this retail revolution, but the accredited investor rules that lock, you know, everyday investors out of OpenAI, out of Anthropic, and some of the biggest names in private markets that don't seem to want to go public right away. How are you positioned if those accredited investor rules change, and do you expect the administration to take that seriously? I think that's one of the things we're going to be pushing for. I think right now we're in a bit of a weird state that we talked about a little bit earlier, where, you know, in crypto, for example, your customers are free to invest in thousands of meme coins, right? But then you have, you know, companies like SpaceX, OpenAI, Anthropic. You know, a lot of our customers are big believers in technology, in artificial intelligence, and things like electric vehicles. And I think the problem with artificial intelligence is a large part of that innovation is actually in private markets. You know, OpenAI, Anthropic, these companies that are making a lot of strides are still private. And so the returns, and, you know, some of the private investors that are in these companies have been sitting on returns of 1,000x plus, are not available to retail. So we think the juxtaposition of that doesn't make sense. You know, you can invest in meme coins freely, but OpenAI and SpaceX and companies like Anthropic are too risky. So I think we need to fix that. What does that look like? Is that a knowledge-based test? You know, if it's not a net worth test, what would you suggest in terms of adjusting that? I think there's many solutions. I think that the platforms that offer access to these types of products to retail, platforms such as Robinhood, should have disclosure that actually communicates what level the different asset is at. So, you know, if you have very little information about it and the company, if it's a private company, doesn't make certain disclosures, it could be one level. And then some companies actually make disclosures at public company level while they're private, and that would be a different tier. But I think my general principle is give consumers the information. Retail should have access to most assets that institutions have access to, and let people make their own decisions. We'll have to leave it here, Vlad, but I do want to say you guys had this sort of, you called it an NBA post-game vibe for the earnings call. Do you expect others to start to do that? You were kind of trying to be Saquon with the sports
it was like a little bit of a broadcast thing. What was going on? Do you expect others to do that?
Well, we've gotten some feedback. You know, I like watching the YouTube analysis of our earnings in the past because we get a lot of retail analysts that ask some good questions.
Yep.
And, you know, it was a little dry, and I think we took that feedback seriously.
Yeah, you guys spiced it up. It was fun. So I hope we'll see if others follow in that direction. Vlad, it's great to see you. Thank you for being here and walking us through that.
Thank you as always.
Guys, back over to you in the studio.
Yeah, I mean, high hopes going in and a 14% surge in the stock right now. Thank you, Kate Rooney, speaking to the Robinhood CEO. Before we had to break, time for our bond report. Let's show you how treasuries are faring this morning. Maybe somewhat surprisingly, there's a bid and yields are lower. And I think it's surprising given another hot inflation read, which we got from wholesale inflation yesterday. It's the opposite reaction we saw yesterday from the hotter CPI number where bonds were being sold off. The 10-year yield, though, still above that 4.5 kind of number, which is a signal of the higher yields. We'll be right back.
One of the best movers on the S&P this morning is GE Healthcare. It's been at about a $10, $12 range for the past 52 weeks, but today they do beat on EPS, beats on EBIT margin. They guide pretty well. Full year organic 2 to 3, streets around 3.5. We'll get probably some insight on that name, which of course Kramer's been paying a lot of attention to when he's back next week. Overall, moderate open. Dow's up 20. We're still around 60-60. Don't go anywhere. Jamie Dimon doubling down on J.P. Morgan's 5-day return to office mandate during a town hall meeting yesterday. According to Reuters, Dimon pushed back on some employee complaints, as one group even launched an online petition for Dimon to soften the policy. Dimon said, quote, "Don't waste time on it. I don't care how many people sign that blank petition. There is no chance that I will leave it up to managers. The abuse that took place is extraordinary." We've been talking about financial services in general pushing for return to office, but Dimon seems to be doing a little bit more too.
Was very early in it, first of all, and I think there are many reasons for that. Why the big banks, in particular, feel like it's necessary. I mean, it's a compliance-heavy workplace. Half the year is spent figuring out who's supposed to get credit and compensation for what they did, and it's not as easy to just sort of do that when everyone's at home. Plus, they're big organizations, and it acts as a bit of a culling process, probably.
And the onboarding for new employees, especially, right?
It's not just financial services now.
No, it's not everything.
You will not find a CEO, at least off the record, who speaks to us, who wants their employees working from home. And I do think there's a bit of a shift on this that comes from the White House. I mean, one of the president's first executive orders before he was even in office for a full day was demanding that federal workers work 5 days a week from the office. I think it feeds into the whole buyouts. You know, if they don't want to work in the office, then they should take the buyouts and not work. And then I found this 2024 report from the OMB, which is showing that the Department of Education, as of 2024, half of the staff work remotely. About 55% of the staff work remotely. Small Business Administration, 48.5% of the staff work from home. Office of Personnel Management, also half of the staff are remote workers. So this is going to be...
Well, maybe that'll help Doge sell the 500 government-owned buildings that they're supposedly looking to put on the market right away
if those people
from the
leave.
GSA. Yeah, I mean, obviously, you know, it's who has the power, labor or the employers? I mean, that's
we knew that this pendulum would swing, and we knew that it was being folded into comp at one point, your ability to work from home, and now it's just completely gone the other way.
No doubt about it.
Well, we're watching an IPO this morning for a change. Cybersecurity firm SailPoint set to make its market debut. We will speak with the CEO ahead of the first trade next hour. Don't go anywhere.
and Jim.
Good Thursday morning again. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and Mike Santoli live today from Post 9 of the New York Stock Exchange. David has the morning off. Stocks are hanging in there quite nicely despite another hot PPI report, another inflationary read that came in a little disappointing on the upside. You've got strength in a lot of groups: materials, consumer discretionary, technology, financial, staples, industrials, energy, utilities, and communication services. They're all up right now. The only ones that are down are real estate and healthcare. The S&P 500 up 1/4%, adding to the weekly gains. The Nasdaq's up now more than 1% for the week. Treasuries also catching a bid despite that warmer PPI report. And we are seeing yields come down a little bit from their elevated levels yesterday, though the 10-year note yield is importantly still above that 4.5 level, which we did break higher yesterday on the stronger inflation number.
It's a very busy day in Washington, D.C. We've got a House budget markup, I got a White House appearance on tariffs, Prime Minister Modi of India, and this, Robert F. Kennedy Jr.'s final Senate confirmation vote to be at Health and Human Services, set to begin at 10:30 Eastern Time. We'll bring you the latest when we get that later this hour.
And we've got a lot of movers. 30 minutes here into the trading session. Here are three that we are watching. Cisco in the green, beating estimates, reporting revenue growth for the first time in 4 quarters. Full year guidance also coming in above expectations. AI, a bigger part of that story. Shares of AppLovin surging. The company which helps developers make apps for mobile devices, but is really now just becoming an advertising company. Beat on the top and bottom line. Revenue up more than 40% from a year ago. Shares have now gained 1,000% over the past 1 year. And then Deere shares are under pressure. Earnings topped estimates, but were down sharply from a year ago. Deere feeling the impact of farmers renting equipment due to weaker incomes and higher borrowing costs. Guidance also pointing to more revenue declines. Deere down 3.4%, but it had been an outperformer on the year.
Meantime, a developing story we're watching this hour. The president set to announce reciprocal tariffs on countries that impose higher duties on U.S. goods. Let's get back to Eamon Javers with the latest. Morning again, Eamon.
Yeah, good morning to you, Carl. I'm learning a little bit more now from White House officials on what to expect at the 1 o'clock event in which the president's going to announce reciprocal tariffs. One thing to watch for is I'm now told that there's going to be a time delay of some kind on these tariffs. They're not going to go into effect today. There will be a date certain in the future. Unclear what that date will be. April 1st has been discussed as a possibility for the tariffs to go into effect. That is still TBD, so don't count on that particular date. But one thing is for sure, these tariffs are not going into effect today. This is going to be a presidential memorandum, not an executive order, so a little bit sort of lower on the totem pole of presidential authority here. The USTR is going to be tasked with identifying next steps in the reciprocal tariffs as part of this presidential memorandum that we're going to see today. We're going to expect to see a couple of new details in terms of exemptions in this announcement today. We're not really sure exactly what the exemptions are. I'm told there will be some slight exemptions to the tariffs. The president has been resistant to the idea of offering any industry group that asks for it an exemption to the tariffs, but he has put in some exemptions, I'm told. We'll wait and see what the details of that are. A couple of CEOs have been in the building over the past 24 hours, I'm told. Not clear which ones have spoken to the president about tariffs, but the CEO of American Airlines and the CEO of Verizon, I'm told, have been on campus over the past 24 hours. So clearly a lot of folks are making their case about their industries to this White House just in general. No CEO calls on the schedule for today, and no indication, I'm told, that there are any exemptions for any particular countries, but we'll wait and see. All of this, I'm told, is a moving target through this morning. They are still putting the final touches on this tariff announcement today, even as we speak right now. So we'll wait and see where everything lands and where the dust settles at 1 p.m., guys.
Eamon, do the countries get a heads up, or are they waiting like we are for the announcement?
The countries have been burning up the phone lines. I mean, I talked to Kevin Hassett, the National Economic Council director, yesterday. He said he's been on the phone yesterday morning with foreign leaders. He said the Commerce Secretary, Howard Lutnick, was on the phone with foreign leaders. All of those negotiations have been going on country by country over the past 24 hours. So we will see whether any countries get an exemption, whether any of that lobbying paid off behind the scenes.
All right, Eamon, thank you very much. We wait till 1 p.m. to see what this all looks like. Eamon Javers. By the way, if you're looking for who's targeted here, the trade deficit, you know, we run a trade deficit. We import $1 trillion worth of goods. We are buyers from the rest of the world, which President Trump has had a problem with. Here are the biggest trade deficit partners or folks that Trump would like to see them buy more from us. China, we know, obviously a biggie. Mexico, Vietnam, Ireland, Germany. That's why Europe is in the crosshairs, of course. And then, you know, rounding out the top 10, which couldn't fit in here, is India's number 10, which Prime Minister Modi is going to be at the White House today. They have tariffs, so they could be a target here. And also Canada is number 9. We did speak with the White House trade advisor, Peter Navarro, yesterday. We asked him about reciprocal tariffs. He said he couldn't announce anything on the show, but he did give us some hints. Listen.
If they won't lower their tariffs to ours and non-tariff barriers, we're going to raise ours to theirs, or vice versa. It's the most common sense thing in the world. The EU particularly has a VAT tax, a value-added tax, and it's not well understood that acts, it's like a two-punch. When they're sending us stuff, it acts as an export subsidy. When we're sending them our stuff, it acts as a tariff. And then, of course, you got the problems with all the other countries around the world. So reciprocity, President Trump has embraced that.
Gives you a little bit of their motivation and the thinking behind why they feel justified in doing this, that they have trading restrictions and tariffs like a VAT tax in Europe, for instance, that make it unfair. So we're now fighting back. Unclear what the upshot of that is going to be. Are they going to buy more from us? Is there going to be more manufacturing in the U.S.? We challenged him on those points, Mike, but it's hard to know what the end game is. One thing is for sure, if they do go with tariffs, they're trying to raise money for the deficit, right? They're trying to raise revenues. So that's part of the strategy, too.
Yeah, I mean, it's one of the effects if in fact it gets paid. The numbers can't get that big in terms of revenue. I mean, obviously, even if we applied it to all of our $3+ trillion in goods imported. And I guess the question is, too, I mean, do we have proper replacements? A lot of India imports of pharmaceuticals, for example. Probably could do it here over time.
That was the crux of your question. Are we going to start making shirts once again?
It's kind of one of these. And if all it is we're going to charge the rest of the world for access to the U.S. consumer, which is the single strongest force of demand in the world, fine. That's what we're doing. It just doesn't necessarily contribute directly to